Yetta, I just love real estate.
Me too.
Moving forward with the Dekker Team. Moving forward together with the Dekker Team.
Welcome to another episode of Life's Inside Track. And I'm Yetta Dekker.
And I'm Ken Dekker.
And it's where we get to share techniques, thoughts, tips, tools, and tactics that we all need. We all deserve, you, everyone, so we can turn our house into home, our families thrive, we live the best life possible, and oh yeah, we build wealth wisely through real estate. Oh yeah.
Oh, yeah.
Oh yeah.
What are we going to consider today?
We're going to consider why real estate is, I'm going to say, the ultimate wealth building vehicle.
Ooh, that's a strong statement.
Well, I might
agree with you, but
let's put it out there.
Okay.
So we want to consider, like, real estate can be risky. It can freak out a lot of people.
Mm-hmm.
And yet we would say we love building wealth and securing our financial future through real estate and have been doing so technically for almost 40 years since we bought our first house.
Okay. Agreed.
Right? And we stepped it up a notch over 33 years ago when we bought our first investment property.
Mm-hmm.
And it wasn't even a good investment. It was just to bail somebody out.
It wasn't that bad.
It wasn't like...
No, we didn't make our money on the front end.
Right.
We did make a little money on the back end.
A little. Yeah. Not a lot, because we didn't own it.
But it got our start.
It got our start. And that's what it's all about. So why real estate? Why we know... It's not just why we believe. Mm-hmm. It's why we know that real estate is a phenomenal, and I'm going to still say the ultimate, not for everyone, and for many people in terms of creating financial security.
Right.
So we're just going to cover like 5 maybe of the 33 reasons.
This is a month of basics. We're just giving some basics, some primers. Yesterday we had our wealth building workshop and we gave a lot, several hours of information and great content, great communication,
and
networking and fun and experiences. Absolutely. And today we're just going to give you a tidbit. So if you missed the last one,
you can go on the wait list because we don't have a date for the next one yet. No. And so you can go on the wait list. You can do that just by emailing together at dekkerteam.com, or you can fill out a form through the dekkerteam.com website. And we do have coming up on June 5th. Mm-hmm. If you're a business owner or somebody involved with driving profits in your business, we have I'm going to say once in a lifetime in Ottawa, opportunity to connect with the author of The Ultimate Sales Machine and have her do a full day boot camp. Mm-hmm. And we're still early bird pricing for another 2 weeks or week, I guess. So it's now.
Jump on the website for that.
Dekkerteam.com.
Under events. Yeah.
Under events.
Okay. So we're going to connect with a few items. We're going to say my number one.
I know it's always your number one.
Is leverage. There are a few things you can leverage. You can leverage the stock market, but it's highly risky because it's highly volatile and there'll be cash calls and all kinds of things. You don't want to get into it. It's a scary place to go.
When you're borrowing money to buy it.
To buy stocks.
Right.
Because as soon as the stock goes down, the bank says, nope, you no longer have 20% in. We want more money. There's a cash call, or they force you to sell at a lower price, which loses money. Real estate doesn't do that. If the price goes up and down, the bank doesn't say, give me some more down payment.
No.
Because the value of the property dipped for, a few months or a year, and now it's gone back up. That's the beauty with real estate. Mm-hmm. It's safe, it's secure, it's real, and you can leverage it at a fairly high rate.
Well, we just helped one of our clients. Well, we've helped lots of our clients do this, but it's kind of like my favorite story right now. Because it was like a 4 or 5 year preparation to get to the point where the right property at the right time, when her finances were where she wanted them to be.
Right.
And we were actually able to help her purchase a great investment property from one of our other phenomenal clients at 100% financing.
Yeah.
That doesn't mean that house qualified at 100%,
No.
Because it's an investment property, you need 20% down, but the 20% was able to come out of her principal residence because she had plenty of equity there. So between her currently owned real estate and the one she bought, she was able to 100% finance it, which you might say, well, sounds risky, Yetta. Well, it doesn't, because it's like, as you've said many times, Ken, it's a shell game. You've still got the same amount of equity. It's just spread out over 2 properties instead of one property. And in fact, you've increased your equity because now you have a second property going up in value and a property being paid down in mortgage. And she still had cash flow, even with 100% finance.
I know. It's fantastic. They're rare.
They are rare. So we don't want to tell you we can do that necessarily. And we've done it before.
Yeah. So leverage, the beauty with leverage is if you're putting 20% down, the asset is 5 times that. So your rate of return is 5 times on the money that you've invested. So it's very spectacular.
So say that again, because I think when I first learned about investing 35 years ago, like real estate investing, I found that confusing.
Okay.
So say it again. Maybe in different words or slower or something.
Yeah. Well, it's just if you aren't putting 100% of the money down, then your investment is 20%. So let's say it's a $500,000 property. 20% is $100,000. You put $100,000 down. The property goes up 5%. That's 5% on 500, not 5% on 100. So 5% on 500 is $25,000. 5%, sorry, on 500. Yeah, 25,000.
Right.
25,000 on your 100,000 investment is a 25% rate of return.
Yes.
That's how leverage works.
Amazing.
Yep.
And then equity growth. So over time, the property goes up in value and you get equity growth from increase of value. Plus, of course, somebody else has
paid down your mortgage.
So
mortgage pay down.
You get equity growth in 2 ways: increase of value and mortgage pay down.
Exactly.
Right.
And then you've got cash flow. Cash flow is your positive cash flow. Sometimes it may even be a little negative, and that's okay. We look at the long-term prospects of an investment, and that's where the consultation comes in. That's where we work with you to meet your goals, right?
Yeah. And here's why I love real estate.
Why is that?
Ultimately, everybody has to live somewhere. And with approximately 20% of the single family residences, residential property being owned by investors, they're providing housing for people that aren't in a position or it's not best for them to own.
And the vacancy rate in Ontario is right around 2%.
2%, which is not much.
People are looking for that, right?
Yeah.
Now, the other thing is tax advantage. The beauty with real estate is it grows tax-free until you sell it. And when you sell it, it has advantageous tax rates.
Yeah. It's still, even with the new-ish capital gains increase, it wasn't great. It was a shock for me. And in the same breath, it's still better than most other investments in terms of how it's treated.
Yep. And then it's a hedge against inflation, because as inflation goes higher, housing typically goes higher as well.
Right. So our question is?
Yep. How will you use real estate as a vehicle to help prepare yourself for financial security? And we're glad that we can position you to build wealth wisely, because it's about much more than just money.
Moving forward with the Dekker Team.